Hi, it's Brian Decker with your Market Minute. Want to talk to you about flows in the market. This is very, very interesting. Year to date, refer to the chart that we've got up here. Year to date flows into the market. Most all sectors are negative except for technology, which is dominant positive. This is very, very interesting to me. And the momentum strategy keeps us in tech so far this year. By the way, from January 1 of 2022 to Halloween, October 31 of 2022, if you invested in tech during that time, you lost over 30%. Boom, just like that. But since October of 2022 to present, if you didn't have tech in your portfolio, any return that you had would be dropped 80%, because technology and semiconductors have been the main sectors of advancement in the markets. So this is very, very interesting. So that's one thing on flows. The second thing I want to show you is the chart on the Callan chart. I put that up in this week's risk strategy email, and it shows that what works and it does very well one year might not the next, usually doesn't repeat for 2 or 3 years in a row. There is sector rotation in the market. Buying and holding real estate, for example, in the REITs might do very well in certain years, but you give it all back. In 2008, the average REIT was down 70%. And so sector rotation keeps us in the top performing stocks, indexes, and ETF sectors of the market. This is really, really important. In retirement, you cannot handle a 30+% hit, because it changes your life if you take that kind of a hit. So we at Decker have tried to focus on making sure that those hits are not taken in 3 different ways. One is strategically lowering your risk by having an offense and a defensive strategy. When the markets go up, we make good money with these momentum managers. When markets go down, we switch to defense, allowing us to make money in down markets. And in past down markets, these defensive strategies have made money every time. Second is quantitatively lowering your risk. People outside of our firm, 60-40, 70-30 portfolios to us are insane. Having that much of your money at risk is way too much. We limit to about 25%, 25 to 30. And last is we have no interest rate risk. We have no bond funds and have not taken the 30-35% hits in the last 3 years. So it's Brian Decker. Hope you have a great week.